All right, everyone, welcome back to the AG Insider. I'm Captain Silver, and we need to talk about what is happening right now because Wall Street is executing a classic Friday morning COMEX shakeout. They are using the government's rigged PCE inflation report as an excuse to aggressively smash the paper price of silver down to $83. But I need you to wake up. This is a highly coordinated trap to trigger retail stop losses and steal your physical ounces right before one of the most critical geopolitical weekends of the decade. The suits want me to tell you this isn't financial advice. Of course it isn't. It's a survival guide for a burning theater. Do your own research if you still trust the people who stole your purchasing power. But let me ask you right now, are you falling for this Friday paper smash and selling your stack? Or are you holding the line and using this $83 dip to buy more physical metal? Let me know your exact strategy in the comments below because I need to understand who has the conviction to see through this manipulation and who is going to hand their physical silver to Wall Street at a discount. Let me break down the real macroeconomic war happening behind the scenes because this is what the mainstream media is not telling you. This weekend in Paris, the United States and China are holding an emergency summit. The mainstream media claims it is about tariffs, about trade deficits, about economic policy. That is a lie. The real fight is over the export of advanced semiconductors, specifically Nvidia AI chips. And here is the undeniable scientific reality that connects all of this to physical silver. Silver is the most electrically conductive metal on Earth. It has the highest electrical conductivity of any element. It has the highest thermal conductivity. There is no substitute for silver in high-performance electronics. You cannot build advanced artificial intelligence chips without silver. You cannot build modern military guidance systems without silver. You cannot build next-generation tech without massive amounts of physical silver. Let me explain how semiconductors work and why silver is absolutely essential. A semiconductor chip is made up of billions of tiny transistors that switch on and off to process information. These transistors are connected by microscopic wires and contacts that carry electrical signals. The performance of the chip depends on how efficiently those electrical signals can travel. Silver, because it has the lowest electrical resistance of any metal, is used in the critical connections within these chips. It's used in the bonding wires that connect the chip to the package. It's used in the solder and the conductive adhesives. It's used in the lead frames. Every single high-performance chip contains silver, and the more advanced the chip, the more silver it requires. Now let's talk about Nvidia specifically, because Nvidia is at the center of the AI revolution and at the center of this geopolitical fight. Nvidia makes the most advanced AI chips in the world. Their H100 and H200 chips are used in the data centers that power artificial intelligence applications. These chips are incredibly complex, with tens of billions of transistors, and they require massive amounts of silver in their construction. When you're building a data center with thousands of these chips, you're talking about tons of physical silver. And right now, the United States and China are fighting over who gets access to these chips because whoever controls AI technology controls the future of the global economy and the future of military power. The United States has imposed export restrictions on advanced semiconductors to China. They don't want China to have access to the most powerful AI chips because those chips can be used for military applications, for surveillance, for weapon systems, for cyber warfare. China is pushing back because they need these chips for their own tech industry, for their own military, for their own economic development. This weekend's summit in Paris is about negotiating these restrictions, but what it's really about is control over the supply chain for the materials and technologies that make these chips possible. And silver is at the heart of that supply chain. Now let me connect this to the Friday morning paper smash. While retail investors are panicking over a manipulated 3% inflation report, the two biggest superpowers on Earth are fighting for control of the very supply chains that require thousands of tons of physical silver to operate. The banks and the institutions know this. They understand that the demand for silver from the semiconductor industry and the defense industry is about to explode. So what are they doing? They're using the COMEX paper market to create a fake sell-off. They're smashing the price down to $83 to shake out weak retail hands. They're triggering stop losses. They're creating panic. And then they're buying up the physical silver that terrified retail investors are selling to dealers. The $83 paper price is a complete illusion designed to hide an unprecedented industrial supply shock. Let me give you some numbers to show you the scale of what's coming. The global semiconductor industry consumed approximately 55 million ounces of silver in 2023. That number is projected to grow to over 70 million ounces by 2027 as AI and advanced computing expand. But that's just semiconductors. Add in all the other industrial applications like solar panels, electric vehicles, 5G, medical devices, and you're looking at total industrial demand of over 600 million ounces per year and growing. Global mine production is only 830 million ounces per year, and it's not growing fast enough to keep up with demand. We already have a structural deficit, and it's about to get much worse. Now let me talk about the military angle, because this is another massive source of demand that people aren't paying attention to. Modern military systems are completely dependent on advanced electronics, and advanced electronics are dependent on silver. Missiles use silver. Radar systems use silver. Drones use silver. Satellites use silver. Electronic warfare systems use silver. Communications equipment uses silver. The U.S. military is in an arms race with China. Both countries are ramping up their defense spending and their production of advanced weapon systems. The Pentagon doesn't care about the price of silver. They need silver to build their weapons, and they're going to buy it regardless of cost. This is creating another layer of demand pressure on top of the industrial demand. Let me talk about the PCE inflation report that came out this morning, because this is the excuse the banks are using to justify the paper smash. The PCE, which is the Personal Consumption Expenditures Index, supposedly came in at 3%, which the media is spinning as good news, as a sign that inflation is under control. That is a lie. The PCE is a manipulated statistic just like the CPI. The government uses hedonic adjustments, substitution effects, and other statistical tricks to suppress the reported inflation rate. Real inflation, the inflation you feel in your wallet when you buy groceries or gas or pay rent, is much higher than 3%. But even if you believe the official number, 3% inflation is still destructive. It means your purchasing power is declining by 3% per year, which means your savings are being eroded, which means you need to protect yourself with hard assets like silver. But here's the key point. The banks are using this inflation report as cover to smash the silver price. They're saying, look, inflation is only 3%, the Fed has it under control, there's no reason to own precious metals. But that narrative completely ignores the geopolitical reality and the industrial demand reality. Silver is not just an inflation hedge anymore. It's a critical industrial material that two superpowers are fighting over. The paper price might say $83, but the real value of silver, based on its industrial utility and its scarcity, is much, much higher. Now let me talk about what happens on Sunday night when the Asian markets open. The U.S. and China summit is happening over the weekend. There are going to be announcements. There are going to be policy changes. There are going to be new restrictions or new agreements. And the Asian markets are going to react. If the U.S. tightens export restrictions on semiconductors, China is going to retaliate. They might impose their own export restrictions on critical materials. They might ramp up their domestic production of chips, which means they're going to need more silver. Either way, the industrial demand for silver is going to increase, and the paper price is going to have to adjust to reflect that reality. The smart money knows this, which is why they're accumulating physical silver right now while retail investors are panicking. They're using the Friday paper smash to buy physical metal at surprise prices before the weekend developments push the price higher. And if you sell your physical silver today, you're doing exactly what Wall Street wants you to do. You're handing them your metal at a discount, and they're going to turn around and sell it to the tech companies and the defense contractors at a massive markup. Let me talk about the difference between paper silver and physical silver in this context. Paper silver is what trades on the COMEX. It's a contract that says you have a claim on silver, but most of these contracts are cash settled, meaning you never actually get the metal. Physical silver is real metal that you can hold in your hand. When industrial users need silver to manufacture semiconductors or weapon systems, they need physical metal. They can't use a COMEX contract. They need actual silver that they can melt down and fabricate into components. This creates a fundamental disconnect between the paper market and the physical market. The paper market can be manipulated by the banks through short selling and algorithmic trading. But the physical market is constrained by real supply and real demand. And right now, the physical demand is exploding while the supply is constrained.
Now let me talk about the timeline because people always want to know when this is going to play out. The summit is happening this weekend. The Asian markets open Sunday night. We're going to see the immediate reaction on Monday morning. But the bigger move is going to happen over the next few weeks and months as the industrial demand intensifies and the physical supply gets tighter. The COMEX registered silver inventory is already at dangerously low levels. If industrial users start demanding physical delivery, if they start draining the vaults, the COMEX is going to default and the paper market is going to collapse. When that happens, the price of physical silver is going to gap up violently to reflect the true supply-demand balance. Let me give you a historical example of what happens when industrial demand overwhelms supply. In the 1960s, the U.S. government was selling silver from its strategic stockpile to keep the price suppressed at $1.29 an ounce. But industrial demand from electronics and photography was growing rapidly. Eventually, the government's stockpile ran out and the price exploded. Silver went from $1.29 to over $50 by 1980. We're setting up for a similar dynamic right now, except the scale is much larger and the industrial demand is coming from much more critical applications. Now let me talk about what you should be doing right now. Holding physical silver is no longer just an inflation hedge. It is an investment in the critical infrastructure of the new global arms race. The United States and China are competing for technological and military supremacy, and silver is one of the key materials that both sides need to win that competition. If you sell your physical metal today, Wall Street will buy it up and sell it to the tech and defense industries at a massive premium. You will have given away your position in one of the most strategic assets on the planet. You need to ignore the rigged Friday paper ticker. The $83 price is fake. It's a manipulation designed to shake you out. The real price of silver is what industrial users are willing to pay for physical metal, and that price is much higher. You need to hold the line. Do not sell your physical silver.
Do not let the banks scare you out of your position. And if you have cash available, you should be using this $83 dip to buy more physical metal. Go to your local coin shop, call a reputable dealer, and secure your physical ounces before the Asian markets open on Sunday night and the true industrial price is revealed. Let me talk about the premiums, because this is where you can see the disconnect between paper and physical. Right now, if you go to a dealer and try to buy silver eagles or silver rounds, you're paying a premium of $5, $6, $7 or more over the spot price. So while the paper price says $83, you're actually paying $88, $89, $90 for physical metal. That premium is a reflection of the tight physical market. It's telling you that there's strong demand and limited supply. And as the industrial demand intensifies, those premiums are going to explode. We could see premiums of $15, $20, $30 over spot or more. At that point, the paper price becomes completely irrelevant because no one is going to sell physical metal at the paper price. Now, let me talk about China's strategy, because this is important to understand. China is the world's largest manufacturer of electronics, solar panels, and electric vehicles. They consume massive amounts of silver for their industrial base. They also understand that silver is a strategic material that they need to secure for their economic and military development. So what are they doing? They're accumulating silver reserves. They're restricting exports of domestically produced silver. They're buying up mines and refineries around the world to secure their supply chain. And they're doing all of this quietly behind the scenes while the Western media focuses on other things. If this weekend summit results in tighter restrictions on semiconductor exports to China, China is going to respond by accelerating their domestic semiconductor production. And to do that, they're going to need even more silver. This is going to create a bidding war for physical silver between the US and China. Both countries are going to be competing to secure supply for their tech and defense industries. And when two superpowers start competing for a finite resource, the price goes vertical. Let me talk about the role of Taiwan in this, because Taiwan is at the center of the semiconductor supply chain. Taiwan Semiconductor Manufacturing Company, TSMC, is the world's largest and most advanced chip manufacturer. They make chips for Nvidia, for Apple, for AMD, for Intel. If there's any disruption to Taiwan, whether it's a Chinese military action or a natural disaster or anything else, the global semiconductor supply chain collapses. And if the semiconductor supply chain collapses, the demand for silver to rebuild it is going to be enormous. The geopolitical tensions around Taiwan are another factor that's going to drive industrial demand for silver.
Now let me address the people who are saying that the semiconductor industry can reduce its silver consumption through technological innovation. That's not realistic in the near term. Silver is used in semiconductors because of its superior electrical properties. There is no other material that can match silver's conductivity at room temperature. Copper is the second best conductor, but it's significantly worse than silver. Gold is better in some applications, but it's much more expensive. For the foreseeable future, the semiconductor industry is going to need silver, and the more advanced the chips get, the more silver they're going to need. Let me talk about the supply side, because this is the other half of the equation. Global silver mine production has been essentially flat for years. The major silver-producing countries are Mexico, Peru, China, Russia, and Australia. Mexico is dealing with political instability and cartel violence. Peru is dealing with social unrest and mining protests. China is hoarding its production domestically. Russia is under sanctions. Australia is relatively stable, but they're not significantly increasing production. There are no major new silver mines coming online in the near term. It takes years, sometimes a decade or more, to discover, permit, and develop a new mine. The supply is constrained, and it's not going to increase fast enough to meet the exploding industrial demand. Now let me talk about recycling, because some people argue that recycled silver can fill the supply gap. Silver is recyclable, and there is a significant amount of silver recycling happening, particularly from industrial scrap and old electronics. But recycling is not keeping up with demand growth. The amount of silver being recycled is around 180 million ounces per year, and that number is not growing fast enough. A lot of the silver that's used in electronics is lost forever because it's used in such small quantities that it's not economically viable to recover it. When you throw away an old smartphone or a laptop, the silver in that device is gone. It's not being recycled. So recycling is not going to save us from the supply squeeze. The semiconductor and military demand for silver is about to completely break the COMEX paper manipulation. You need to hit the subscribe button and turn on the bell notification right now so you receive my emergency broadcast the exact second this industrial shortage forces silver into a violent short squeeze. This is not optional. Your financial survival and your ability to participate in this historic wealth transfer depends on being informed and being positioned ahead of the crowd. Subscribe now, turn on notifications, and prepare for the industrial silver breakout. If you want to understand exactly why the global mining industry cannot simply dig up more silver to fix this massive tech shortage, you must click the video on your screen right now. I exposed the terrifying secret Wall Street just admitted at the world's largest mining convention. Do not wait. Click right here, and I will see you in that video.